Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Monday, March 31st. And it does seem like everything is coming down today. So good to be cautious about that. Personally, I'm sitting on the sidelines, not really planning on making any moves. But yeah, first over here, we're going to go over the UVIX, which is typical here. And the UVIX is the 2X long VIX futures ETF, which went up over 17.5% on Friday. And in the pre-market, it is up more than 10%. And so the way that I like to look at this is by thinking about it having kind of like a 1 month cycle or a 2 week cycle where it goes up for 2 weeks and then down for 2 weeks and then it kind of repeats. And so it does seem like that is what has happened. I was, kind of hoping it would go down a little bit more. Did have this alert here at $28 a share. It's not putting the number over there on the side, but this should be 28 as you can see. And yeah, we didn't quite come down to it. Came down to a low of 28.67 on March 25th, and that really does look like it was the bottom of this downtrending period. So I am just going to, let's see, adjust this to, I'm actually just going to close that, unlock it so I can move this over. So we do have it there, and then that bottom, what did I say? That was 28.67. So I am just going to adjust that here. And so, yeah, I mean, that is what we were looking at. And I unfortunately did not pick up any shares. It would have been really nice to, but we also might be, got this alert over here. It doesn't say it on the side, which is, again, annoying, but it says 40 right there. And, we are trading above that currently in the pre-market at 41.37. Like I said, being up about 10.5% in the pre-market. But let's just draw up another rectangle here to mark the next 2 weeks. So that's going to be going, this week ends on the 4th. And then so next week, the following, I believe it's the 11th. Yeah, so the 11th there. So this is kind of like, what we could be expecting. And I'm just going to put it back up to that high of 52.99. So just going to draw in those levels. This 67, 52.99. And so that is what we could be seeing in the coming 2 weeks is a continued rally higher. But I suspect we'll be hitting a top at some point and then pulling back. And so on that pullback, I think that would be a very nice time to just have some of this to hedge. The market is volatile, and so I think this is a good way to be able to at least make some money when the market goes down. But before I continue on to the next one and actually go over the 10-minute time frame on this, did just want to mark this gap as filled because clearly it was with that 17.5% move on Friday, and I might actually make that line a little bit thinner just so it doesn't stand out too much. Actually, I'm just going to delete it because the gap's been filled. But yeah, let's look over at the 10-minute time frame here real quick. And yeah, I mean, this has just been like on a rampage the past 1, 2, 3 trading days. It was kind of flat 4 trading days ago. But yeah, in the pre-market, gap up above that purple level with a high of 41.42 in the pre-market. And so that purple level is just this downtrend from really this pivot high and then effectively intersecting with the high over here. So yeah, maybe that's going to be acting as some resistance or like we will be bumping our heads around that light blue downtrend. And we are currently below that. And that downtrend is really based on, these 3 pivot points over here. Let's see if you can see all of those. So those 3 pivot points, and effectively since the massive move to the upside on August 5th, we have just really been consolidating in this downtrending channel, although we did recently get a little blip above it. And maybe, for this time, maybe we get up to 54.60 No idea, but I am just going to leave the top there at 52.99. But anyway, switching over to the VIX here, this is of course the market volatility index, did go up almost 16% on Friday, 15.84%, and closing the day above $20. I've got this alert marked here, closing at the week at 21.65. And so I suspect this will be gapping up, and that maybe we'll be bumping into this uptrending level that I have marked here. Let's just see what are the pivot points for this so I can kind of extend it. I'm just going to look at the low from here, and that pivot point will stay there. So yeah, just keeping an eye on that, making sure that is lined up. And so, yeah, I mean, this is what we could be looking at as resistance. Maybe bumping our heads around this orange line at 23.76, or perhaps getting higher. I suspect we'll be getting higher. And also, I should note that I feel like a lot of this panic that's in the market is really just pricing in the April 2nd tariff announcement from Trump. And so because we're seeing so much red leading up to that, or green in the volatility indexes here, I think that pricing that in advance, maybe we get a rally towards the end of the week. So we'll have to see. But anyways, here looking over at the SPY, this is the S&P 500 tracking ETF, which closed on Friday at a price of $555.66, being down just over 2%, and then continuing down about 1% in the pre-market, right around $550.52. But we did, of course, just like with the UVIX and the VIX, did fill this gap here, so I'm actually just going to delete that, so we don't need to be seeing it. And then this gap here in the UVIX, I don't think I had it marked, or maybe I did have it marked. Yeah, and I deleted that gap. But anyways, the SPY coming down pretty massively here, and currently being around 50.25, and that does correspond pretty nicely with this Fibonacci retracement. It's the 1618 from this move here, from the low hit on January 13th, going up to the all-time high from February 20th. And this actually looks like, we've been forming a bear flag, and that we could be seeing a measured move to the downside, or a Fibonacci extension to the downside. So I'm just going to draw that up here, thinking that that's a possibility. And so just going from that all-time high down to this low, and then to the high here, if we take a step back, that would be suggesting that price could be coming down to around $513, and that does correspond with the bottoms over here. So 513, that is really where I could see the next level being to the downside. But we also do, of course, have this uptrending level here based on these two pivot points, the low from April 19th as well as from August 5th. And we're still above that, and that will be coming down to, let's see where this alert is at. It looks like, $548. So maybe we could be seeing that act as some support, but it also might be, short-lived. If we are going to continue down to around 513. So keep that in mind. Good to be cautious of that. And then just looking over at the 10-minute time frame, we can see that did kind of form a top at the beginning of last week, but then we had started to trade lower Wednesday, Thursday, and Friday. Now gapping down into the pre-market, but trading right around that 1618, around 550. So very interesting to see that level holding up as support. We'll have to see if it holds up into tomorrow's pre-market prep. Hopefully it's not too red of a day, but I suspect it probably will be. But anyways, looking over at the SPX, this is the S&P 500 index, really just looking at the same things that we were looking at with the SPY. Do have that green uptrend here based on the lows from April 19th and August 5th. We are still above that, so there is still some hope that we could be finding some support here. And let's see where this alert is marked at. That's around $5,504. And I should mention, forgot to, that the SPX did close on Friday at a price of $5,580 and at 94 cents, being down about 2% on the day. And of course, not having any pre-market trading going on with this one. But yeah, let's just take a look from that all-time high down to this low up to the high here to get that 100% Fibonacci extension. That would suggest a price target of around $5,144.17, corresponding pretty nicely with the low over here. So yeah, I mean, we will have to see. I am pretty compelled by that. Do have this gap fill on the way down there, but let's hope that 5,000, let's see, what was that number? 5,500, right around there, holds as support to be maintaining that green uptrend, but we will have to wait and see. And then looking over here at Bitcoin, this is one that I am pretty excited about. We did form a CME gap on Friday that is at a price of around 83,770, somewhere around there. If we do flip over to the hourly chart, we can see how I drew that, and that is based on, this time here, that was from Friday, March 28th at 5 p.m. Eastern. That close is that, CME gap. And so there is potential for an upside move to fill that gap, which I believe is about 2% from current price, right around there, 2.4. And so I did place a buy order at $81.5 thousand. It's in my Robinhood account, and the spreads there aren't that great. And so, I am hoping that gets filled, because it'd be nice, just $50. So it'd be nice to get, a $1 profit there on that 2% move. But if it doesn't happen, it's not the end of the world. And I am really just kind of experimenting with those CME gap fills. And if we do go lower, I will just add to that $50 increments, no problem. But if we do really fall off a cliff, I'm fine to just keep that on the sidelines and then move that into my long-term storage. So no big deal there. But yeah, I mean, I just kind of trying to step that up from from $10 buys to 50. And then if this does end up playing out, then, the next time maybe I do it in $100 increments. But yeah, I mean, we are about to start opening the market here, or the CME close, I guess, when trading does resume for the markets this morning, Monday. That will be the CME gap up to the upside. So I'm looking forward to that. But anyways, this has been bleeding a lot, has been coming down. So I've got to mention BITI. And it does look like, this did, I don't know when I marked this. Oh yeah, there was just a gap there, and, to fill that. And we did get that to be filled. Let's just get this measurement tool here. So from the lows, that represented about a 5.5% move to the upside to fill that gap at around 25.90, which was the close on Friday, 25.91, going up about 4% on the day. And I should note, I don't think I mentioned it, BITI, this is the ProShare Short Bitcoin ETF, so kind of a way to counter trade Bitcoin, but it does look like it is up in the pre-market by about 2.62%, trading around 26.59, which is right around this gap fill here. So very interesting to see that. Just looking at the close there from the 18th, that's 26.44 marked there. Just going to make that a dashed red line so we can see that there. Going to delete this one because that's been filled. And so this would have been a nice little trade going from, the close there up to here. That's about 7.75% move to the upside. So very nice there. And then real quick, let's just look over at Ethereum. This is on the hourly time frame. Wow, I was looking at the hourly time frame. So, oh no, I was looking at the hourly time frame on Ethereum. I don't know why this one switched over. I guess because Bitcoin. No, I don't know. I think I keep switching them, and that's why it's because this, I put this on the hourly. Crypto is then going to be on the hourly. Go to the day. Crypto is then going to be on the day. Anyways, breaking below this yellow uptrend, trading around 1,700 or just below 1,800 at $1,790 and about 50 cents or so. Below that yellow uptrend, we do have the green uptrend below us between 14 to 1,500. But if we do switch this over to, let's see, the weekly, and we do switch this to the log scale, does look like that green level is support, but we are actually breaking that now. So it doesn't look so good. So maybe it is better to be looking at this on the linear scale with the dip buying opportunity, dip buying potential to be around, let's see, just going to put in alert there at around 1500. And yeah, so I mean, I think that we could be seeing some nice dip buys in Ethereum, and this would then correspond with some very nice potential to the upside, getting back to those all-time highs and beyond. I'm looking forward to that if it does happen. But anyways, running kind of short on time, so I am just going to head over to uranium, ticker symbol URA. This is the Global X Uranium ETF, which closed Friday at a price of $23.10, being down 2.28% on the day, and in the pre-market, continuing down about 1%, trading around $22.85, $22.85. And so that is still above the low over here, but it does look like we have gotten this Fibonacci retracement there. So not looking so great, but depending on where we trade at today, the low from over here was 22.78, so it would be nice to be holding above that. But if we do look at this, just like we had over here, downside move consolidation, does look like we had another downside move, and effectively it's kind of a steep slope, but consolidation here. And so maybe that is a bear flag that would be suggesting further price action to the downside. So I can just take a little Fibonacci extension there, so we can see price target might be around $18.86, maybe 19. So do look for the possibility of that. But this looks like this green uptrend does seem like it could be some notable support being over here, although this does look like it could be a head and shoulders pattern. So maybe that looks like it is going to be the neckline that would be suggesting even further downside, which would be taking us even lower than 1886, which would be just basically, that kind of measurement. That would be suggesting 1169 to the downside, so keep that in mind. But anyways, I got to get headed to work, so I'm going to get doing that. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and be safe trading today. It's going to be a rough one. Take care.